is a cost for you as the lender to not have access to the money. Remember, Nelson talked about lost opportunity cost. If you pay cash, you finance it. If you borrow money, you finance it. We're financing this no matter what we do. And so we need to be smart about it. And we need to teach our kids that there is a cost to money. And if it comes back to you anyway, and then it eventually goes to them, win-win. Hello, and welcome back to the podcast. Thank you very much for being here. All right, today, let's talk about charging family interest. This really ties into being an honest banker, putting on your banker hat, you becoming the banker. But most people don't want to do this. And so I think this is a great topic. Some people disagree with me on this. Wholeheartedly, passionately disagree with me on this. And I'm totally okay with that because we don't all have to agree. But I want you to think, right? Let's not have the arrival syndrome. Let's think about it. And especially with what I am teaching, charging your kids interest is not a bad thing. Unlike people that will maybe charge their kids interest and then they just, it goes nowhere. We're not building anything with it. And so it's a little bit different and we have to think about the big picture of how we're handling money. But Nelson talks about becoming your own banker. And there are characters in that play. There's the banker, there's the borrower, there's the cash user, and there's the owner of the bank. And so we have to be all three of those. And that's hard sometimes for us to get our head around. But when we are lending money to people that we love, we tend to want to give them some sort of an advantage. And we're like, oh, we'll give you 0% interest. You can just pay us back whenever you want. And so what happens is we don't make payments. It's like student loans, right? The government has said, oh, we're just going to defer your student loans and you don't need to make any payments on them. A good money manager would say, I'm going to keep paying these student loans because now I'm paying principal. Everything I'm paying is going to principal. So let me get this paid down faster. Instead, we've stopped. The majority of people that I talk to, if student loans are at 0%, they've stopped. They stopped paying them because they'll just resume again when the government decides that they're going to change that rule. And so why? We've already been making them. If we still have the same cash flow coming in, why wouldn't we continue to make those payments? Human nature. That's why, because we're like, oh, we've got this money, we'll spend it on something else. If we stop making student loan payments and we use that money and we spend it on other things that create cash flow, fantastic. But if we are using that money to buy pizza and beer, not so fantastic, right? Because at the end of the day, that pizza and beer is going to cost us interest. It's one pool of money. We have to look at it that way. So let's go back to these family members. So here's a great example. One of my kids started their own business. They needed some startup money. And they were like, yeah, we could do a HELOC and it would be 11%. And I said, wow, I'll lend you money at 11% all day long, right? And it's one of my kids and then one of his friends. They're business partners. And so I said, I'll lend you money all day long. But I said, I'll charge your business partner 11%. And I said, but I'm going to charge you 20. And he just kind of looked at me like, what are you talking about, Mom? And I said, well, if I lend you money at 20%, I can take that extra percent. I can go buy more life insurance with it. Will then leave you more money when I die. Is that a bad thing? Nope. Am I taking an unsecured loan? Yes, I don't recommend doing this, you guys. This is not at the top of my list of recommendations, okay? I did tell him I'm going to have an insurance policy on his behind, but I'm like, if I charge you more interest and I utilize that money correctly, isn't that money going to help you at the end of the day? Isn't that money going to provide something for you that allows you to have more money, even if I didn't put that money in a policy. Well, I would. So let's just use this scenario. Let's say that he pays me 20%, and then I use that money to buy a life insurance policy, and then I borrow against the policy and I buy more cash flowing assets, more property, more farm ground, more whatever with that. Look at what I did with his 20%. Like the policy is they're charging me 15. So if what 15% more? Why would any kid not be okay with that? And as an unsecured loan, I did not take tools as collateral. I did not take a vehicle as collateral. I didn't take anything as collateral just because of the situation. And I kind of know where to find him, right? Bad move. Like, I get it, you guys. I talk about all is good until it's bad, right? They do have to sign a contract. There will be an amortization schedule. There is a loan contract that has to be signed. This is when you're going to start paying. This is when you're done paying. All of those terms and conditions are there. But if we continue, and I see this so much, that mom and dad are like, oh, I'm going to give you a loan at 0%. You just pay me back when you can. Okay, that's fine. Go ahead and do that. But why are you not charging them interest? And I've talked about this in another podcast where if mom and dad are loaning money without interest and they don't have the cash flow coming in, they're actually financing that, right? Because if mom and dad don't have the cash flow, but the money they did have, they lent out with nothing coming back, now we just got ourselves into financial difficulties. And we have to be smart about what we do. But it's so interesting when people are on social media and they're seeing me say, hey, don't lend your kids interest or don't lend your kids money interest free. And they get mad as if you're the bad guy. You're the bad guy because you're charging them interest. Yes, I am. Because I'm the bank. And so why wouldn't I do that? If I'm going to be the banker, I am going to lend plus interest because I could have used that same money and I could have used it as a down payment to a rental property. I could have started a business with it. I could have hired another employee to expand my business. Whatever that dollar amount is, I frankly don't care if it's $500,000 or if it's $10,000. There is a cost for you as the lender to not have access to the money. Remember, Nelson talked about lost opportunity cost. If you pay cash, you finance it. If you borrow money, you finance it. We're financing this no matter what we do. And so we need to be smart about it. And we need to teach our kids that there is a cost to money. Now, if I charge them 20%, is that really bad? They did not have to go to the bank. They're just starting a business. They don't have steady income. They don't have history behind them. And you know what the bank's going to say? No, thank you. You have a nice day. I am not lending you money. It is not any different for them to start a business than for you to start a farm and expect the bank to lend you money. If we don't have outside money coming in, they're not lending you anything. And so it was really easy. Let's just go to mom. Let's see if she'll lend us some money. They didn't even argue on an interest rate. What other option did they have? Go to the bank, use any money that they have in savings. They don't even know if they need to use it, right? They're basically using it as a line of credit because they had enough other money saved up to get them by. But with it being winter coming, they just didn't know what kind of work are we going to have? How much work are we going to have? How much money are we going to make? Because owning a business is volatile. No different than owning a farm is volatile. We don't know what we're making on any given day, but we're not doing our loved ones any favors by telling them that we will lend them money at 0%. Why? We think we're helping them when in fact, we're not being honest bankers. And if it comes back to you anyway, and then it eventually goes to them, win-win, right? It is no different than if we're going to sell the farm to the kids. We're going to sell it to them plus interest. Because guess what? If you die and they have to buy out their siblings, they're going to have to go to the bank and pay the bank interest. So why shouldn't they pay you interest? Then, when you die, we have money from the land sale, right? We have a little bit of extra interest, and that may get divided amongst all the siblings. Maybe you're going to divide it amongst only the siblings that are off the farm. I don't know what you're going to do in your estate plan. Your estate plan is 100% up to you what you want to do with it. But if you think about that, we always want to charge this super small amount of interest. And I've ran the numbers and I run them for you guys a million times. If we charge a lot of interest and less per acre, we make the same amount of money at the end of the day, but we don't pay as much in capital gains. Again, it's a factor of interest. So I'm sort of beating a dead horse here, but I just don't understand why it is a bad thing if I want to charge a family member interest because they are using my money. And then I now have insurable interest in them. So I am going to buy a life insurance policy on them. Because if they default on that loan, guess what? I'm going to get that back if something happens to them. I will get paid if they cannot work. And if something happens and they die, let's say he falls off of a roof and he passes away, I have the death benefit to make me whole. Okay? Not looking to get rich out there. I have the death benefit to make me whole. I have some death benefit to maybe use for the grandkids, whatever that looks like. But if he passes away and I didn't get paid back for my loan, I'm out that money, right? And because it's a non-collateralized loan in this scenario, because I really don't like what good are his tools, right? If it's a non-collateralized loan, then I am going to make sure that I have something to protect me on my side. If you disagree with me, let me know. If you agree with me, let me know. Either way. I love, like when people disagree with me, I love it because A, it gives me content to talk about and further explains stuff, right? Like, why am I thinking that way? And a lot of times people are commenting just on a clip or something on social media. And so it's a clip. Like, if you are out there, maybe we can make this a clip. If you are out there commenting on a 30-second clip without watching the entire podcast, you maybe should understand that this is just a clip. This is not the entire podcast. So go do yourself a favor, educate yourself on the entire thing, and then you can come back and comment. I just always think it's funny how people are very quick to comment, but they don't actually listen to the entire thing. That coming from somebody who does not like to listen to the entire thing of anything. I'm like, hurry up, let's go. I have the shortest attention span. And yet I still listen, probably because it's done to me all the time. But if you are commenting, did you hear the whole thing? I don't know. Okay. Let me know if you have comments, questions, concerns. It's all about you being the banker. It's about you being honest with your money and making sure that you can pay things back plus interest. Are you making enough to pay the interest? If you're going to make enough to pay me interest, you're going to make enough to pay the bank interest. All is good in the world. You're going to charge correctly for your product and your services. Mary Jo at withoutthebank.com. You can go to farmingwithoutthebank.com. Grab your books. Grab my book. Grab Nelson's book. Get them both. And then we'll set up a meeting and we'll talk. All right, you guys, you have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.